Hey, it's Mack with PriceActionTradingSystem.com. It's Wednesday, it's July 15th. This will be our chart lesson for today. And really, in the end, this is just a range day. We had a rather significant sell off here, but the market took it all right back again. So, in the end, we closed up. We closed yesterday at what? 2102.50 maybe, and today we closed at 2104.50. So maybe a 2 point. We closed up 2 points for the day, but like I said, I would categorize this as a range day, and it was pretty obvious early on. This was prices stayed inside this big move for most of the day until this huge sell-off here, and then we recovered and took most of it. Okay, had a slight interruption there, but you can see we were pretty much flat for the day range. Um, and really, the only way to trade these days is to draw your short-term trend lines, and then it becomes real clear. Every one of these worked out perfectly. You got one working down here, a break, a new low. You got one working up here, a break, a new high. You got one working down here, a break, a new low. You got one working up here, a break, a new high. Then you get this trend working down right here, a break, a new low, and then that got you into the 2 o'clock hour. But I'm sure there's a trend line working up on this one just the same way. This one's probably working. Just glancing at it, looks like it's working up right off them lows like so. You see that fits really well at the top, and we overshot that right before the close. So these shorter term trend lines help. Of course, you got to draw them right. Somebody sent me their chart. I had one guy ask about, I think he went long right here. But if you're not paying attention and you don't realize it's a range, you don't realize, especially with this low right in here, when this made this double top, um, you know, and then broke higher and fell down and came down, you can't be going long into that. And then I had somebody, I think he actually had his trend line wrong. I think he drew it a little flatter, and somehow it fit on his, but I couldn't make it fit on mine trying to draw it flatter. It just doesn't work. But then I had somebody else send me an email today, and I'll just read his email. Okay, here it is. This gentleman sent me his chart. It says, I had a horrendous day. In the end, and there's your key words, in the end, he says, I decided to draw my lines. What a difference. You cannot emphasize trend lines enough. So there you go. There's somebody, and you'll hear me scold myself from time to time that I'll be talking and say, well, I don't have my trend lines on here. I forgot to put them back on, or I can see this stuff. I've looked at these charts so long, I can glance at it and see them quickly and don't really have to draw them, although I do draw them because sometimes the breaks are real subtle, but yet it's enough to be a break, and if you miss it, you're in trouble. And so um, draw these trend lines because every one of these signals, when you got the break here, that's the signal that the trend's going to change from down to up. What does it usually got to do? It's got to make a retest attempt, and it usually will with a new low. And guess what? It makes a new low that's lower than that one. And it's working up. Well, we closed outside. There's your hint that, hey, the trend's ending. Makes a new high, and then now you got a trend working down. You get a break here. Hey, there's your signal. The trend's ending. Makes a new low. Starts trending up. You get a break. Hey, there's your signal that this little short-term trend's ending. It makes a new high, and it's headed down. And we really went into congestion there, and you get a failed breakout and a chance to get short, and then you got a trend working down. There's your signal it's ending. You get a new low, and it reverses. And it's this is as good a price action as it gets. It doesn't get any easier than this. But you got to pay attention to the bigger picture and understand that this flat EMA with prices swinging both sides means you're in a trading range. So when you get to this low, you got to be real careful. And when you get up here near this high, you got to be real careful. So you can't go long right into those highs. And you don't want to get short. You got room here to get out before you get to this low. Um, and it turned out to be a heck of a trade that you would never guess was coming. The first thing I would have done, I would have measured this leg right here and look for a measured leg down, and that gets you close to the lows. But then I would have measured this leg, and when we started going lower from there, I would have looked for at least a measured leg there. And you see it started bouncing there because all the smart traders are exiting. It did go a little lower and then it reverses, but that gets you into the 2 o'clock hour. So draw these lines. I can't emphasize it enough, just like the guy in his email said, you can't emphasize it enough. If he had drawn his trend lines, maybe he was okay and wouldn't have had that horrendous day as he described it, but it definitely helps. So draw those trend lines. And you can see the volume is still down. The volatility is still down. It got a little volatile this afternoon. There's some great setups here. Um, I've looked at the 2,000 tick chart. I can't tell much difference in them. In fact, I compared them side by side today up until about 10 o'clock, 10:30, and I actually liked my volume chart better than the tick chart. So um, I don't see any reason to change. You can train. They looked. All the setups were pretty much the same. The only reason I liked the volume chart a little better was it had a little better signal bar. So, um, it's neither here nor there. I think they're very similar. I think the 65 was the perfect replacement for the tick chart when there was a problem. But now that there's no problem, if you want to go back to the tick chart, go back to it. There's not much difference. I can't tell any difference. I got one trader, I won't call his name, but he sent me email after email. He gets a little anal about things, but he was convinced there was a difference in the 2000 tick chart between, and the volume chart. But I think it's just a mental thing. But understand that so much of what we do here is mental that you don't want to argue if you don't feel comfortable with something, then by all means don't do it, because if you're not comfortable, you're not going to be confident. And if you're not comfortable and confident, you're not going to trade well. So, little mental aspects can trip you up quicker than anything when you're day trading or any kind of trading. So, always be comfortable. If you're not comfortable and you're not relaxed, do not take a trade. If you can't get comfortable, get relaxed, just watch your chart or get up and go take a break or go walk around the block or take the day off or whatever it is you like to do. Because if you're not comfortable and you're not trading properly, you're just going to donate money, and that's that. And you can see there's not a lot of trades today. Again, until really late this afternoon, the volatility was off and the volume was still off. It looks like it picked up a little maybe late in the afternoon, because that's a lot of bars really from 2 o'clock on compared to all night and into about 1:30, I would say. So the volatility and the volume picked back up here for whatever reason. Maybe some news item, I haven't looked. Maybe some news item came out. I don't care. All I know is that the setup's there. I take it. I don't care what caused it, why it's there. Don't worry about all that, because all you're going to do is confuse yourself. Don't watch the news. Forget about the news. The only thing you need to know is if there's an important news item coming out, so that you don't get caught in the market when it's about to get crazy. Other than that, we could care less about the news. And if you haven't heard me say that before, make sure you hear that, because you can't. Even if you knew the news in advance, it wouldn't help you, because if you thought it was bullish, the market can be bearish. And if you thought that news was bearish, the market can be bullish. So, um, really, most all the news that comes out is priced into the market long before it ever comes out, and it's just uh, all that news reaction is just an emotional reaction to traders that don't know what to do, that are lost, and trying to trade news that's a losing cause. So don't get caught up in all that. The price action is here. It tells you what's going on. That's all that matters, and that's all you need. Forget all the rest of it, because it's just a waste of your time. And I can assure you that. And if you ever make it, you'll understand and get what I'm talking about. Enough of that. Let's talk about the trades. There's not many, so we'll get through this pretty quick. First trade I saw was this failed second entry long. The prices are moving down. There's a shorter term line in here too, um, like so. And you got a little two-legged correction right there. Let me just change this line a little bit so it doesn't get confusing to anybody, because I know you're out there. Those of you that just come look at the trades and you don't listen to the video, you're missing stuff though. So, but there's a shorter term one right there. Then you get a two-legged break, and that's a failed second entry long. Obviously, you don't want to be going long out of that right there. But when you get a double top, you're already working down. You got your first break of the short-term one. It really set up the trend line for the other one. Go short right there. It's a second entry short. It's a failed second entry long. It's a two-legged correction, and it's a trap. It's a long trap, and that was a nice, quick trade right around 7 o'clock hour. And then you got your break here. Notice how it gapped across that midline right there. See that over and over and over. But it went higher here and turns down and goes out the other side. That is a hugely bearish bar. It's a first entry. Um, what it is really, it's almost another breakout attempt, pullback test of this area, and it's just another test of that double top. So this creates a triple top and a big bearish bar. Aggressive traders going to take that. That's a nice setup. It's you know since it's the first entry and it kind of shot through the EMA and gapped over the midline. Some of you got to be careful with that one, but that's such a bearish bar right there. You can't ignore that. And you're looking for a new low, retest of a low. And I really thought prices would probably test this low, but we get a new low in reverse. So this one's a little aggressive, but if you want to take that one, I'm okay with it if you understand why and you took it for the reasons I just described. Um, and again, this is so flat and it's got a little bit of a downward bias still at this point. So I don't like going long on either one of these, but when you get the failed second entry short, that's your reversal pattern. Uh, right at the EMA, you got through it, you come back and test it, and you get a failed second entry short. Just go long right there. Nice, easy trade. And then you get another pullback, and you get your break of this channel here. There's a first entry, moves up, then it pulls back, and then it goes back up again. It actually pulled back and tested this 2 or 3 times. Um, and if you went to a smaller chart, you would probably see a second entry long here. So um, it's kind of hard to see, and there's a little bit of overlap, even though the closes are moving higher. So I did circle that one green. It's not a clean second entry that we like to see. So, and it's getting close to this, but you figure we're going to test that, and there's enough room to get out. So I'm okay if you took that one. But you definitely can't go long here on a first entry right into the resistance. And this looks kind of like a breakout pullback long, and it would have worked, but I don't recommend going long there. You already had your break, and you got a new high. And notice how this didn't go much higher, and you're right into this final overnight high. Odds are it's going to go lower, and it does, but it looks like you could have gotten a trade out of either one of them, but it's not worth risking it. You're better off to wait and wait for your short setup. And it's tempting to go short right here because that's your second entry counting off the high. The first move down is your first entry, pull back, and then when you make your second leg down, that's your second entry. It's a little bit different type of second entry. And I probably should have named it something else, but I didn't. I've called it that forever. It's the way I've taught it. But if you're trying to figure out, it'll confuse you. Don't worry about counting off the other side until you learn how to get the second entries with the trend, because it will just confuse you. So probably shouldn't even brought that up because I'm probably going to confuse a lot of people again. But I would have liked this trade even better if it would have ticked higher and trapped some more people on a failed second entry long. But look how many times we tested that resistance line that you had drawn from the overnight. 1, 2, 3, 4. And then you can see this actually confirmed the trend line when it touched and gave you a small low risk entry on a bearish bar. So I like that one. Somebody else sent me their chart, and they went long right there. And theirs actually broke higher. I don't know if it was a tick chart or their chart was just different or what, but it broke higher there, and they had their trend line drawn a little bit different. And for some reason, they couldn't understand why they had a loser there. But if you see what's going on here, you got a trend working down, and this confirmed it. And this is strong resistance that you don't want to be going long into anyway. And so this is a short. And then there's another short right here. This is actually a failed second entry long, so I probably should circle that one green. But notice the new high, pull back first entry, then you get another leg down, second entry. So That's a pullback and test of the trend line again. It's just not a very good signal bar. It's a first entry, so there's reasons to be leery of that. And there is some support right there, so it's also a little breakout pullback short. So there's some reasons to want to take that trade. Um, I think you're better off to wait on a better setup, which is here, that comes here. And notice this is your first break of this channel, so you're going to get a new low. There's plenty of room there to scalp out. But just wait on this bar. When it breaks lower, you could put a stop there, but you could try to get in with a limit order if you want. I just put a stop there. You make your new low, and then now you're trending up. You get a break, and this one's kind of quick and maybe you don't even notice it, but there's a break, a new high, and then it turns back down. If this would have went straight on out the bottom, I would have said go short right there, but it didn't. It held. So notice what happens then. You got a new low there, first entry, pull back, second entry, and so that's a nice second entry short right there. And man, if you caught this one trade, you could ride it at least to here. Um, but you could ride this all the way down, and this one trade would have given you, and then I would definitely consider adding on here. And if I wasn't in, I'd get in here because there's still room to scalp out again before getting to those lows. And look at it go. So if you could catch either one of those, or if you caught both of them, those two entries right there would give you all the money you need for the day. So, but the hard part is sitting here being patient and waiting on these setups all day. If you took only the clear blue or red circles, there's only 1, 2, 3 trades before 11 o'clock, 4 before lunchtime, and then after lunch there's only 2. So this is when you got to be patient. And I see people that finally get that comment occasionally and send me emails and say they get it, because if you're constantly looking for a trade in here, especially if you don't even understand what's going on, you don't know where the prices are headed lower or higher, and it's all spelled out clearly here today. So anybody tells you can't read price action and know what it's going to do, they don't know what they're talking about. And I hear it all the time. The market's a random walk. Nobody knows what the market's going to do. No, we don't know where it's going to be tomorrow. We don't know where it's going to be an hour from now. But it tells us which way it's going short term, and we can make money off of that. That's all we need to know. And generally, I can give you a good idea reading this chart where it's going to be. When I'm reading it at 9 o'clock in the morning or doing my midday chart, sometimes I can tell you where, give you a good idea where it's going to reverse and where it's going to find resistance and support and where it's going to go, its targets are going to be. So people that tell you you don't know where prices are going are just wrong. The market is not random or it's not as random as everybody thinks it is. And, these people economists that teach economy and, teach school, and they'll tell you it's all a random walk. Nobody knows where it's going. That's don't believe that bunk. So that's enough about that. But anyway, good trading day, limited trades, but there's all you need here to make a great living, and that's just it. Make sure you understand that you only need 2 or 3 good trades a day, 2 or 3 good scalps a day to make a good living. And you don't need 8 or 10 or 15 trades a day. You're going to lose money if you trade that much, because there's not that many trades on a lot of days. So keep that in mind. But I'm going to wrap it up. Hope you had a good trading day. If you didn't, study your chart. That's the key to this. Trading itself will not make you better. The key to getting better is there's a couple of pieces to it. Number one, you need screen time. You need screen time, screen time, screen time. But that's only a small piece of it. Just getting the screen time and the sim trading alone will not make you that much better a trader. What you have to do is make sure you mark all your trades, and then at the end of the day, study them. Figure out why the ones that worked. Figured out the ones that didn't work, what you did wrong. You either read the price action wrong, or you made a mental error. You did something wrong, because the price action is never wrong. So figure out what you did wrong, study that chart, and just in the meantime, between screen time and studying your trades, Get your hands on as many charts as you can and study these areas where you get the reversal patterns. Notice what's happening. Here's a reversal from, we're moving up and we reverse down. We're moving down, we reverse up. Study those areas closely because there's a pattern here and it tells you what's going on and you can figure it out. Um, you learn to see it enough. So it was a little indecisive on this reversal, but this reversal was fairly clear. This one was real clear. This is a notice how we went right on through the EMA, pulled back, went right back through it, and pulled back and tested it. Got that failed second entry long. That's a nice typical reversal pattern, and you can see those over and over. And if you learn what to look for, the break of this channel coming down, the new low, and then the reversal pattern, those are the gimme longs. They're gimmies. And so learn to spot them. But anyway, I'm done for today. I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.